What happens when you combine the most innovative, eccentric and charismatic leaders, disruptors and founders from tech, with the pedigree and history of one of the most established institutions within the City of London? The Searching for Mana podcast will be produced in partnership with the London Stock Exchange. I'm Lloyd Wahed, the host of Searching for Mana. We're going to be interviewing some of the leaders, influencers and disruptors in the tech space, where I'm going to be trying to dig in and find out what's their mana, their superpower, their magic. Welcome on to Searching for Mana, Cathie.
Oh, thank you, Lloyd. I'm really happy to be here. Thank you.
Super excited to have a conversation with you on many different topics. For those who know or don't know, Cathie of Ark Invest fame is, and Cathie, you do this properly in a second, but just broad brush, an investor who I think reputationally is known and focused for good reason on innovative spaces across the macro economy, has been someone who's been known to be very long on stocks such as Tesla, and on markets, emerging markets such as Bitcoin, digital currency, and much more, which I'll give Cathie the opportunity to introduce properly. For the show, we'll cover 3 sections. We'll get into what's going on right now in Cathie's world, and then we'll get to dig back and really find out what her mana is. And at the end, we get a chance for Cathie to project into the future, which obviously she's got a unique vantage on. Cathie, if you could be so kind to set the scene and explain to everybody, who you are and what you're doing right now at Ark Invest, please.
Sure. Thank you, Lloyd, again. Yes, we are focused at Ark on only one thing: disruptive innovation. Disruptive innovation that's going to cut across economic sectors and create mass market opportunities. And the reason I started the firm 10 years ago was because I saw an unmet need out there. Our world was moving towards passive or benchmark style investing. And the innovation that we're seeing proliferate right now, like never before, is very forward looking and is going to disrupt the traditional world order. And so we focused only on disruptive innovation and 5 major innovation platforms: robotics, energy storage, artificial intelligence, blockchain technology, and multi-omics sequencing in the life science space. And the reason they are so important is because each one alone is going through its own life cycle, S-curve life cycle, but they're going to converge into amazing opportunities. And I know that we'll get into that a little later, but in terms of the scaling in the next 5 to 10 years, I think the world will be reshaped. It will be hard to recognize it if you're, basically living in history and trying to figure out, oh, how's this going to work out? So,
thanks, Cathie. When you 10 years ago, and firstly, when you have those 5 pillars now, are those the same as you had 10 years ago?
That's a very good question. We had 4. One of them was next generation internet. But we did our first blog on Bitcoin and blockchain technology in 2014. And we also were learning more about the deep learning breakthrough in AI. So we said, wait a minute, both of these that we have combined into next generation internet, each is actually going to be huge. And we need dedicated analyst resources on these technologies. We cannot combine them. And so that's what we did. We broke them apart. But to answer your question more completely, the seeds for these 5 platforms were planted during the early days of my career in the 20 years that ended in the tech and telecom bubble. and they've been germinating for all these years. We're ready for prime time. And what's very interesting about investor psychology, I know you're too young to have been in the markets in the late 90s, but investors were just scrambling to get into anything that sounded like the internet, .com anything, and they were valuing these companies based on potential eyeballs in the next 10 to 20 years. That's how crazy it got. We are seeing nothing like that now. A little shade of it maybe, or a slight echo in AI specifically, but really AI is profound and provocative, and we should appreciate how big this is going to be. It's the biggest catalyst to all innovation. But as far as the other platforms, we've got investors very fearful and hugging their benchmarks with interest rates moving up and fears of inflation and geopolitical risk and so forth. And so in that kind of environment, it is rough for our strategy, but it's a great time to gain exposure after we've had a great run, which we did last year, and a bit of a correction.
Yeah, so we'll get on to AI and what an absolute mega trend it is, and have a particular interest to talk around the convergence of it with blockchain, which is a fascinating topic. But just to stick in this zone, at this kind of formation of Ark, question is, so I had Tim Draper on the show recently, and asked him around how he gets his conviction in investments. Obviously, famous venture capitalist. I'm sure you know him. And it was, and this is to simplify. Of course, it's very complex in many ways. But he gets a feel because he's in the valley and on top of trends, and the typical type of answer you might have had from 20 years ago from a venture capitalist. This is starting to change now.
Yes.
10 years ago, when you were making those assumptions on those trends, I'd like to understand your process. So it sounds like there's 20 years of, as you say, kind of the seeds of these trends and seeing them coming through. And then I suppose thinking through, technically, is the timing right for them to become mega? Was this very much like Tim, instinctive, human, talking, feeling it, reading it? And also, is this coupled with, and I'm leading the way, so tell me no or yes, and then I want to know how, an awful lot of analytical data and trends spotting. Talk us through the process of how you got that conviction, Cathie, please.
Sure. Well, we center our research on something called Wright's law. Now, Wright's law is a relative of Moore's law. So Moore's law is very well known in the semiconductor space. Basically, big improvements every 18 months to 2 years.
Yep.
So Wright's law is a function of time. Moore's law is a function of time. Wright's law is a function of units. And today it's working better in the semiconductor space than Moore's law is, because Moore's law is hitting up against the laws of physics, right? And Wright's law says for every cumulative doubling in the number of units associated with this new technology, for every cumulative doubling in the number of units produced, costs decline at a consistent percentage rate. It's a different rate for each technology, but for each technology, it is consistent. So cumulative doubling is 1 to 2, 2 to 4, 4 to 8.
Yep.
And a man named Theodore Wright in the early days of airplane manufacturing observed this law. And it basically analyzes the learning curve associated with each technology. Learning curves are associated with cost declines. Declining costs open these technologies up to more segments of the market, if not mass market long term. And so that's our starting point. Now, just to go back to the late 90s, if someone had been using Wright's law back then, as we were, although to be honest, we stumbled when we started on at Ark on the formula that Wright's law came up with. So when in the late 90s, if the investors had used Wright's law, they would not have rushed into these stocks. Why? The technologies were not ready. They were too high a cost level, for sure. They had not. And that's certainly from a cost point of view. But the technologies themselves, when you think about the internet and really artificial intelligence, the cloud, everything that has been feeding this bull market, well, those breakthroughs, AWS, Amazon Web Services, wasn't until 2006. Deep learning coming out of ImageNet, the first real breakthrough in AI, 2012. 2017 was transformer architecture. So the dreams of the late 90s were not possible without these breakthroughs, but it would take 15, 20 years for the breakthroughs to take place.
Yeah, it's absolutely fascinating to study the history of, I mean, in this instance, innovation, to try and predict correctly, the time you're in and the timeframes it will take for things to emerge. So perhaps let's do a little bit of that. The period I think that we're in feels very much like the Renaissance. You've heard this example many times, I'm sure, or not. But we look at the blockchain space and we look at what's happening with the emerging art, the emerging creatives, the opportunity it's giving to people to have ownership of that type of creativity and then garner a career from it, rings true. And then if you start looking at finance, it's affording, and it's just at the beginning, very small units of distributed individuals to make a living out of it. So I'm really excited about it because ever since, and I'm not that young, I just about started my work at the end of the 90s. Ever since I've started, people have been, talking around the gig economy and the future of work, and people won't work for corporations. And I think this might be true, but it's just in that instance, it takes a lot longer than people either hope or predict it might happen. So is that going to happen in the next 10, 20 years? It could now. There is I think with digital assets, the potential that this is going to happen. And I'm excited about that because philosophically, I think most people don't want to do the one thing mostly. They quite enjoy having a few projects, a main project, and super exciting to see that come through. So I'd love to know, and sorry, by the way, everything I just said there, I say assumptively, you might disagree with it, but if you follow along with this trail, what do you, and this is not so much about price, what are you excited about what's going to emerge from this technology, AI, blockchain, over this next several years?
As you were just talking, one of the things I like to explain, because we get this question about Elon Musk all the time. Now, he's a genius, and he's a supercharged version of the person you're describing. But you notice he is in, it looks like, very different places. How can he possibly keep track of all of this? Well, one of the reasons is because he is a genius, but the second reason is there's a convergence among technologies that is taking place today. You mentioned AI and blockchain technology. We do a podcast monthly called The Bitcoin Brainstorm. And the second episode, we had on people who were examining this topic or actually making it happen. And one of them was associated with the Lightning Network in Africa. And he was telling us that, with micropayments, this concept of microfinance is on steroids right now, and redefining the division of labor. So we think we understand the gig economy now, and it's a good thing that it's happening. So we're introduced to it, but it is in overdrive in Africa. There are people capitalizing on the convergence between Bitcoin and artificial intelligence, and providing microanalysis and being paid for it. So it's already started, and the emerging markets is often where you see a leapfrogging of technologies that are kind of well established in the new world. I mean, the old world. So this convergence is important, and yes, that means that you almost have to be very collaborative. So yes, decentralization, but collaboration as well, if we're right on how tightly coupled some of these technologies are going to be, and the kind of explosive growth that they're going to deliver. So yes, definitely agree with that. And I think that we get the question all the time, that this time feels to us like another time as well. And that's the early 1900s. So in the early 1900s, we had a war. That was World War I. We had a major pandemic, the Spanish flu. And we had supply chain issues. We had major bout of inflation that had to settle down. And I believe we've been through a replay of that. And and now we have yet another war. So we may face some reverberations. It is during those times, very difficult times, that innovation gains traction. And at that time, in the early 1900s, there were three major platforms evolving at the same time: telephone, electricity, and the internal combustion engine. And they were going to transform the world completely. And what they did also was turbocharge global real GDP growth. So for the 400 years, from the 1500 to roughly 1900, real GDP growth was 0.6%. Because of these three new platforms, it moved up, it accelerated from 0.6% to 3%. That's where we've been since there on average, with China really feeding it in this last 20 years. If we're right, the five major platforms that we're talking about are going to take real GDP growth up again. Now, it went up fivefold with just three platforms. We believe that we are very conservative, and that we're moving into the 6 to 8% real GDP growth worldwide. That sounds absolutely crazy to people, but these five platforms are going to increase productivity tremendously. They're going to create products and services that we cannot, and jobs that we cannot even imagine right now. And so we think that 6 to 8% is conservative, because AI alone, the productivity gains that we're seeing already, coding productivity up twofold, just within, it was almost immediate with ChatGPT and Replit and some other tools out there. So I think it could be more than that, but we don't have to bet on more than that. Nobody believes us right now. They think that the world's going really into a slide back down to 2.5% GDP growth. So 6 to 8% relative to that, thanks to these technologies, is going to be quite a surprise. The other thing I want to add, though, just like in the early 1900s, there was a great deal of discomfort and some social unrest, right? Because people don't like change. And so one of our missions and values at Ark is to spread the word and basically say to people, look at what is happening out there. We give our research away because we do want to educate. We give it away to school systems, school also. Look at how the world is going to change. Get on the right side of change. It's going to be a beautiful life. If you don't, there's going to be a disruption of the traditional world order, and you might get caught in that.
Yeah.
So be proactive.
Yeah, I love it. The way that you describe the world in the early 19th century is similar to how I would think of it from just a human perspective as well. You know, the greatest normally incremental improvements that one makes is when they've had to go through a phase of resilience, adversity. You know, as long as the ambition remains, then you're creating a scientific experiment with yourself and you're coming out stronger. And I think that, you know, several of those macro trends that we've all just been through, one obvious one being locked away for COVID for a period of time, just creates this ability for people not to stay in their comfort zone. And when that happens, as you say, you know, whether it's within a year, whether it's in 10, this is where some of the great progress makes. And, you know, the thing that stops that individually is when people rest on their laurels, are fearful, are comfortable. And so it's the same thing, isn't it? It's, you know, AI is the same as people not wanting to move to cars. And there's this really good insert from a book written by one of the Susskind's, which is A Future Without Work, where he's talking around, they didn't know how to solve for all the horse manure that was on the streets of England in that era. And obviously everybody was racking their brains and coming up with inventions of how to get rid of the horse manure. And obviously what happens is Henry Ford comes along and suddenly that isn't an issue anymore. Maybe an issue for the horses because then there are a lot less, but a good analogy nonetheless for, you know, we're very worried often about the chaos that's perceived from something like artificial intelligence. But human nature is to bring chaos and to order it. So you know what's going to happen is regulation around AI. It won't run as quickly as people think. And there's a lot of conversation around that topic right now. Mistakes will be made. But if you could just zoom out and say, as you guys have, in the next 5-10 years, does this mean the economic cookie is going to be bigger? There's that every single historical fact points towards yes, right? So I'm with you,
Yes.
Cathie, on that one.
Yes, and it's interesting that you bring this up. It's an important question, AI, because I was around. I've been in the business for quite a long time, and I was around in the early 90s when the internet, when actually email was first connected to the internet. That was in the early 90s. And many people don't know this, but in the early 80s, it was illegal for consumers in the US to use the internet. It was for defense and intelligence and academia and all of that. It was hooked up to the internet, email was, and that got people very excited. And so Cisco, which had been on a very strong run, was on a tear after that. And about a year later, so that was the ChatGPT moment when email was hooked up to the internet. About a year later, Cisco, which had been on a wild run, much like NVIDIA has been, Cisco went down 50%, even though we were just at the beginning. Why did that happen? It happened because corporations finally understood, okay, this is a big deal. We're starting to allocate serious resources. There are a lot of competitors emerging. Where do we allocate our resources? How do we best position to take advantage of this major productivity enhancer and stay competitive? And so there was a bit of a stall. And then, of course, Cisco was off and running again. And I'm beginning to sense that we're at the same point with corporations right now. They hear about hallucinations with AI and confabulations, and the open source models, which are free, and the closed source, which you pay for. And they're basically saying, wait, we have to make some strategic decisions here, because we're all over the place in all of these different divisions. We have to aggregate our data. We have to clean it up and integrate it. We have to map out our workflows in excruciating detail if we're going to be able to harness the productivity gains that AI is promising. And so I think that there is, combined with fears about the macroeconomy as interest rates and inflation pick up here again, there's a little bit of a pullback.
Yeah.
And I did just want to add one more thing to the comments about the comparison to the early 1900s. In the early 1900s, we had an inverted yield curve. And what does that mean? That's when long-term interest rates are below short-term interest rates. That's an unusual occurrence. And it usually happens because the bond market is seeing something that the Fed or other monetary authorities are not seeing. What is it? It's deflation. Innovation and deflation go hand in hand because of the learning curves associated with technology. So I think the fears of inflation, and they're heating up again, I think that those fears are going to dissipate quite quickly as some of these deflationary technologies start moving the needle.
Yeah. So just before we go into the why, because all of this, you speak with so much passion, we could all make assumptions why you're doing it. You know, it could be financial. I know it'll be more than that. It could be you want the world to be better, many things, but let's not answer that yet. We're going to go and do that in the middle section. I'm just going to very quickly, we did this also with Whaley from BlackRock. It's remiss of me not to get your response on some of these key topics, Cathie, if you don't mind. I know you get asked them a lot, but we're in the end of April 2024 for any future listeners. Just want to get your view on a few things. You can keep this pretty short, or just say I don't want to answer it. If you want to talk to any of them a little bit more, then go for it. I'm going to go really quick on these ones. We've got the Bitcoin halving happening in this very week. What is your prediction with how that will affect the price?
We think there's been some anticipation as all of our ETFs have launched here in the United States. There's been a lot of education and this idea, get in before the halving, because it usually means good things for Bitcoin. Some of that has already taken place, but we do believe that the increasing participation of institutions, and they've barely begun here, is going to take the Bitcoin price up, especially now with this halving. For the first time, we're going from roughly 1.9% increase in Bitcoin supply per growth per year to 0.9. And so for the first time, dropping below 1%, which is the long-term average growth rate of the gold supply. And many people call this digital gold. Okay, now we're truly competitive, and actually more competitive, because if the gold price had gone up the way the Bitcoin price has gone up, you bet miners would be out there figuring out where else they can find new supply. Whereas that is not possible with Bitcoin. It is mathematically metered to go up when the halving occurs, 0.9% per year. So I think in that way, it's even better than gold. So we do think it has miles to go. And just to give some perspective to your viewers, we gained exposure to Bitcoin in 2015 when it was in the $200 to $250 range. Today, it is $62,000. And I can save our price target till the end. I know you want a futures looking end, but stay tuned and we'll give that. So yes.
Yeah, awesome. We'll finish on that. Do you have and we can compare it to Tim Draper's 20 trillion price prediction, which I like. Are you as excited about the Ethereum ETF that's rumored to be coming through?
Well, our confidence that it is going to come through. We're one of the first two in line in May, and our confidence is going down that it will be approved, and that maybe any will be approved this year. A big issue for the SEC is staking, and so that's an important part of the Ethereum ecosystem. And so I think the SEC wants to do a lot more work on it. So are we excited about Ethereum? Absolutely, especially with all the layer 2 solutions being built on top of it. Are we optimistic that an ETF will see the light of day this year? Our optimism, shall I say, is dimming.
Last one, thank you. US election predictions.
Oh gosh, I haven't done this. It is such a hard one, you know? What I usually say when people ask me, it's usually in reference to our investment strategy. I usually say, you know, innovation is a bipartisan issue. Few people are against innovation until it's about to hit the traditional world order in which they are a part, or in which they live. There is one exception this year, interestingly, and it involves young people, and it involves Bitcoin and crypto generally, or digital assets generally. It's surprising to me, but the Democrats have been reticent, and Republicans have been much more amenable to legislation going through Congress. So there are some young voters that are changing their party affiliation from Democrat to Republican. Again, big surprise to me. I don't know if that's going to gather momentum. I think when Joe Biden learns more about it, or his team learns more about it, they probably will calm the rhetoric down a bit. So who knows?
Thank you. So, changing gears, Cathie, if you could be so kind to think of a moment in your background as far back as you would like to go, which really could set the scene for you know, you forming as a young person, where you might be able to remember first thinking around careers, investment, entrepreneurship, so that we can understand whatever the relevant influences and experiences you had. It could be school, it could be family. Thank you.
Oh, sure. Well, my earliest memory, probably I was 6 or 7, and my goal was to do one of two things, either one of these, either be a ballerina, and I was not taking ballet lessons. I had a cookie tin with a ballerina on top, and that. But the other one was I wanted to cure cancer, because I had just learned, you know, death was at that young age. It was like, what? And so learning about that, I wanted to cure cancer. So that was the first, I would say, glimmer of, wow, you want to help transform the world. And then my father was a design engineer for radar systems at what he calls the dawn of the electronic age. And I learned through him, because both he and my mother were Irish immigrants into the US. We did live in the UK as well, actually, for 5 years. And his education, by different accounts, 6th grade and toward high school, probably no diploma. How did he make it? He made it, well, thank God he was drafted into the American Air Force when he got here, and they trained him on this new thing that was not being taught in college, radar systems. And guess what? He made it, and, you know, was able to provide for his family. I'm not going to say he wasn't discriminated against because of the lack of education, but he made it. And that taught me that innovation is the great leveler. I know there's a big debate out there, increasing the divide between haves and have-nots. I disagree with that totally. Just think about the smartphone alone and how it's proliferated through the world and given access to people, who never would have been able to understand what was going on in the rest of the world, and what was important to learn about. So that was another one. And then in college, it was in the 70s, and inflation was raging. It just seemed like the economy was out of control. I learned a lot from a man named Art Laffer, Professor Art Laffer he was at USC, University of Southern California, trying to establish a supply side school of economics along sort of the Austrian economics. And I was in his classes, and I was learning so much about what happened in the early 70s. We closed the gold window, and all hell broke loose with inflation. And I just became fascinated with monetary policy, so that and macroeconomics generally. So just to fast forward on that, come to Bitcoin, that's a global monetary system. I understood that better than the people who were making the technology happen. And so my yearning for a rules-based global monetary system started way back then. And that's why that's why we got in so early. I said, with Art Laffer, who is a friend of the firm and an advisor, I said, this is such a big idea. This is a big idea. He said, yes. How big could it be? Well, how big is the US monetary base? And back then it was 4.5 trillion. Today it's 7.5 trillion. But back then, Bitcoin was worth 6 billion in total. So very big idea. These things take a long time to evolve. Bitcoin has happened faster than most.
So if we go back to that moment in college, which it feels like a couple of things have happened there, as you say. One is you've really become passionate about what you want to work within, which could just go the way of being an economist or an investor or in finance or an academic. But the other is your father's shown you being on the cutting edge of an innovation can be incredibly useful in one's career. And also perhaps you got to see how much he enjoyed that versus an office job, which I assume you did. And there's also another element was the influence on you. Do you feel that, either mentors or your parents kind of gave you a work ethic, or did you just observe that and have it naturally? I'm curious about that. And then I have another question.
Yeah, that's a good question that really no one has asked me ever, actually, that I can remember. So my father and mother, so my mother had a high school education, but coming to America, the land of opportunity, the only thing, I'm the oldest of 4, but I was raised like the firstborn son. And the only thing drummed into my head was education, career, education, career, education, career, production, productivity, a real engineer. So that's how I grew up. And, it was also, to be the first to graduate from college. And many people are the first to graduate from college here in the United States. That's not so unusual. But with immigrant parents, where a lot was riding on this for them, more than I understood, of course. I just thought they were trying to guide me, in the right direction. And they did. God bless them. They did.
Yeah. Okay. So that because I'm always trying to form what I do with my firstborn 5.5-year-old daughter, who at the moment wants to be a ballet dancer. But I'm like, there needs to be a female Warren Buffett. This will be the child. So what I'm taking from that is extreme discipline. Okay, great. Thanks, Cathie. I'll replay this clip to her. And so then we've got the experience, we've got some understanding of the impression that you had from your parents. You get your teeth in at college. You're obviously working with an amazing professor. And then, not to do a LinkedIn talk through. But if you could take us to really from here, the moment that gets you to found Ark, please.
Oh, sure. Okay. Well, Art Laffer introduced me in my junior year to Capital Group, which in our industry is, well, it's a very large institutional asset management firm. Now it's retail and institutional. Very well regarded, especially for research, deep research. And I started in economics and then got a call from an economist in New York saying a company in New York was looking for someone with my profile. And what that really meant when we cut through it all is they wanted to bring on board. Remember, back then we were in double-digit inflation and interest rates. Productivity was collapsing. The US was the laughing stock of the world economically. And clients needed hand-holding that we were going to get through this to the other side. What they wanted was someone who understood economics, but who was not going to impose her process or her economics, I should say, on the investment process. Just wanted to hold clients' hands. I became fervently interested in the stock market and was trained and given the amazing opportunity to train with the chief investment officer, Sig Zagalis is his name, very well known. I was there for 18 years. And he, the most important thing he did for me when he said, yeah, you can do equity research, but you're not taking stocks from any other analyst. You have to find your own. And what that did was force me very early in my career into this convergence idea. Database publishing, so Reuters, Telerate, database publishing. No one wanted to follow that. The tech analyst didn't want to follow it because it had publishing. The publishing analyst didn't want to follow it because it had tech. And I said, I'll do that. I will do this. It's exciting. And of course, that was the earliest days of what became the internet, right? That kind of a model was evolving. And same with cell phones at the time, we called them. No one wanted international cell phones, meaning cell phone companies. And I said, I'll do that. I'd lived abroad and, so that also turned out to be a very big idea.
So you're forming a thesis here where there's a couple things, there'll be many, but a couple is one, that this is not saturated with other analysts. And then two, multidisciplinary coming together excites you. This is the magic that you like to look at, which still exists right now. And then you're here for 18 years. And then, when do you get the conviction? But also, why do you, 18 years as an asset manager, I assume everything from a financial house perspective, intellectual rigor is there for many people. Why do you step out and found?
Yes. Well, an insurance company took over Jennison while I was there. And actually very, very, very early on in my career there. So in 85. However, they were just taking a percentage of revenue. The year I left, they were going to take a percentage of profits. And that's not why I left, but they were already putting in some rules and regs that I thought they didn't appeal to me. And one of my colleagues was also leaving to manage her family's fortune, family office, and asked if I would join her. And so that's that. And I thought, okay, this way, it's global. We can go long and go short. So it was a hedge fund. And I really wanted to learn a lot more about that because because of the disruptions that were going to take place. And so to be able to be somewhat neutral, I won't say we were truly neutral, somewhat, somewhat protected on the downside. That was interesting. And especially the global part of it too, because we were very US centric at Jennison. They've, of course, gotten much more global since, but I went off. And then it was a 3-year home run, a grand slam, because, can you imagine late 90s, this was late 90s into the early 2000s, to get both of those at the same time. And so that my partner decided that we weren't going to build out institutionally, that, that we would just stay a family office. And I knew that wasn't really for me. So I then moved on to AllianceBernstein. They were looking for someone in 2001 who didn't do things the way their portfolio teams did, just something different. The CEO at the time, because so many of their portfolios were positioned similarly, he wanted to bring someone in a little bit to be an R&D engine and to manage portfolios, but really not impose my process, but some of the ideas on the rest of the firm. And so we started 2 new research efforts under my purview, one on very early stage companies and one on top-down research. How are these technologies going to evolve over time? And that's where this idea of Wright's law really came about.
Yeah. And are you in that setup sponsoring R&D and PhDs, or are you, maybe both, are you choosing to select PhDs who are coming out the relevant research? What's your process there?
Yes, so our analysts have deep domain expertise. The way we've set up our analyst team, we've organized it not by sector or industry or sub-industry. In some firms, they have 5 consumer analysts and 5 healthcare analysts. Instead, we've set our analyst responsibilities up by technology, because we think that these technologies are the relevant variables. They are going to scale across sectors. So we've kind of flipped the way research is set up. And so they have domain expertise, many of them coming from school, having been educated in the latest technologies. Some of them coming out of a short stint in industry, especially with consulting firms. So, and if they've been touching certain technologies in any way, that's very interesting, because they have perspective that many people in school will not have, coming directly out of school. So it's a blend of both. What we do not have are traditional financial analysts. And this is a little bit like Sanford C. Bernstein. If you've heard about that company and its history, it combined with Alliance Capital, and that's where I worked, in the combined company at one point. But the founder of Sanford C. Bernstein said, it is much easier to teach a rocket scientist, or today a biochemical engineer, how to read and build financial models than it is to teach an MBA rocket science and biochemistry. It's almost impossible to do the latter, right? So that's the reason.
Yeah, that makes complete sense. We'll, in the final section, just come back to part of that, but just to finish this middle mana section, Cathie, really trying to find out what your mana is. So for anybody who doesn't know, or for you, mana is an expression used in gaming. So you have power, and then you have mana. So power, think of it as life, fundamentals, hard skills. And then mana, think of it as soft. Perhaps you're a ballerina who can fly in the sky, you have sword skills, whatever it might be. So ask a few questions and then we'll get to what we think your mana is. So to start with, your favorite publication, let us know what it is, and then what would you put on the front cover?
earliest publication. The first thing that comes to mind are, there are economists and strategists that I take their work and I'm addicted to it. So, but that's not commercial. You're talking about a commercial publication. Am I right?
Oh, I've had a few contrarian responses, so do that if you'd prefer. The point that I'm trying to get out of it is, I suppose, yes, almost if there's a big message that's going to go to your preferred community, what would it be?
Okay, a big message. The message would be convergence. It would be convergence. I don't think many people understand, how quickly these technologies are going to converge and how important it is for all kinds of reasons, not just investing, but just education and chosen career, how important it is to get on the right side of change. So that and you won't find the answer to that unless you understand how AI is going to converge with almost everything. And, even in the case of transportation, let's just say, mobility of all kinds, if it's going autonomous, that's the convergence of 3 different platforms, but if you're in a silo or a sub-industry, you're not going to see that coming. So it's really important to step back. And this is what we do. We educate, saying, do you understand this is how the world is evolving? Now, as I mentioned, we do this for education as well. Our research has been made age appropriate for 6th grade and is the science curriculum throughout Pinellas County, where St. Petersburg, Florida is based. That would never have happened in the Northeast. The Southeast is very hungry for this, but this is not being taught in schools.
Yeah, I was just going to say, with that message, that's immediately what I was thinking, is how is that clearly just not happening in the traditional educational space right now? And you're working on solutions for some of that, I'm sure.
Yes, absolutely.
Next question. Not coffee, but what keeps you up at night, Cathie?
Nothing keeps me up at night. It doesn't. I've learned over the years, what used to keep me up at night was a streak of bad performance. I'd be very hard on myself. And, markets go through styles and style shifts. I think I'm comfortable enough with what we do and how we do it, even though many other people are not. They would not accept the volatility in our portfolios, but we're not going to be someone's entire portfolio. We are a sliver. And, we've done studies, and I just keep reminding myself of this as we go through bad streaks of performance. Longer term, and the interest rate and inflation increase of late has been a killer for our strategy. So this is how I know that that nothing really keeps me up at night, because that was a horror show, and we're still trying to dig out of it. But I know if we're right on the convergence among these technologies, we will dig out of it. And the volatility, you can look at that one of 2 ways. Most people think only about downside volatility, but there are 2 sides to volatility, and upside volatility is what you want in a bull market. So I console myself during a rough patch with that experience. First of all, it's always been this way, and that expectation based on our research.
Yeah, on the human side, you have to form such a meditative resilience on your conviction over the long term, as you clearly have. So massive respect for that. That is where the biggest wins come from, and I know you know that. Similar type of point, but with a slightly different question. What have you learned from that period in last cycle that you take into this one?
I'll tell you what I've learned. At the peak in February of 21, when investors thought we could do nothing wrong. I mean, anything we said, the media seized upon it and ran with it. And I was saying to my team back then, this is not good. This will not end well. So I want you to be prepared for a bear market. And I was even saying to our investors, keep some powder dry. And of course, they didn't listen. There was a big pile in as it was buy the dip, buy the dip. At the peak, Michael Burry, do you know who he is?
Yes.
Yes. Michael Burry.
But for the audience, let's explain.
So what is the name of his book? He made a magnificent call on the 08,
Well,
09
he was
crisis.
in the Michael Lewis book,
Michael Lewis,
which then was turned into a film.
Is it the Big Short?
The Big Short, yeah. And I'd read the book first, and it's fantastic to read the first few chapters, which describes the different type of characters who are in finance. Like, he nails that. But anyway, yes, Michael Burry.
Yes. So he, right around the peak, as we're starting down. Now, remember, I'm already saying, okay, we're going to have a correction. He said, okay, this is a replay of NASDAQ 1999 to 2003. And that ended very badly. I think the market, peak to trough, the market was down somewhere in the 75% range. And he said, he overlaid our chart against that chart. And remember, I've just spent a time telling you that this time is nothing like that last time. So because the technologies are ready now and the costs have dropped low enough, which was not true back then. And he overlaid our fund on top of the NASDAQ and said, that's where it's going. And we would say post now in this new X age, but back then I tweeted, Michael Burry, you made a fantastic call around the subprime mortgage crisis, but you do not understand innovation. We're ready for prime time or something like that. And I wish I hadn't written that, and I'll never do that again, because what has happened in the interim is algorithms, AI. This is a crude form of AI, are whipping the market back and forth. And from our strategy's point of view, we were a sitting duck, the easiest mark for an algorithm and the quant researchers behind them to say, okay, which kind of strategy is going to be hurt the hardest by rising rates? We have a very long duration strategy. Our investment time horizon is 5 to 10 years, but 5 years is what we're modeling. And if even at the peak back then, we thought we still would be able to deliver our minimum hurdle rate of return for the portfolio, the flagship, 15%. But we knew we were going to have a correction just because the psychology was all wrong. And instead, we went down more than the NASDAQ did, which makes no sense whatsoever. But with algorithms, and we also saw this microcosm in COVID, 1 month as we were all figuring out, oh no, this is a disaster. Is the world going to shut down? The markets, depending upon what metric you use, were down 25 to 30% in 1 month. Our flagship was down 46%. But back then, and I knew it was algorithms and only algorithms, much like it is, I think, today again. But back then I was saying, okay, fine. They had taken many of the names in our multi-omics strategy down by 80%, 90%. It was crazy. They were looking at only 2 variables, cash and cash burn. And I said, wait a minute, who do you think is going to solve this problem? Who's going to sequence the virus, the coronavirus? Who's going to use synthetic biology to create tests? Who's going to create a vaccine? who do you think is going to solve that problem? It's our companies. Why are you selling them? And of course, they were the top, the flagship strategy went up 360% in 10, 11 months. The genomic strategy went up, I think, almost 500%. And again, then of course, we suffered for the next 2 years. Last year, nice big run up. We're seesawing now. Algorithms saying interest rates up, interest rates down, interest rates up, interest rates down. And so goes our portfolios. This will pass. I have been in many markets where interest rates go up and we perform significantly on relative to the benchmarks, any benchmark. 2017 is the last example. Interest rates up, we're up 87%.
We have a fund that's coming to market that's digital asset focused and very future looking, which will be focused on the reinsurance world. So it's a first of a kind. And I'd love to, not now, but pick your brain around investor relations, because what we're trying to be very, very careful around is that everybody makes it a sliver of their portfolio, but also that they are truly passionate about this coming to market and the benefits of it coming to market over a long period of time. And I'm sure you've got close to a masterclass of, who's invested in this, understands that what you're doing, shouldn't necessarily be, by the quarter market prices. This is, we want this to happen because by doing this, yes, the economic cookie increases. Yes, brilliant premiums and returns will happen in various points. But we're sat right at the top of like volatility of when people have a bull or a bear mentality.
Yes.
I'd love a conversation around it. I suppose one way to solve for that might be, do you put a large part of your portfolio into much less future forward-looking assets, and so that it can balance it for this period of time? Or do you not? And as we're discussing, you really have to make sure that the investor conviction is there for the long term, or both. How do you think around that?
It is so important to educate investors. Just like when we are moving into a new position, we don't buy a full position right away. We will average in, and we ask our investors or show them the statistics. This is a very volatile portfolio. Volatility works both ways. Just know there's downside volatility and upside volatility. So the way we've done a study, and it's on our site at ark-invest.com about, or it may be on ark-funds.com.
We can put it in the show notes.
Okay, super. About allocating a sliver, and I think we did 5, 10, 15% allocation in a total equity portfolio, meaning value equities, growth equities, emerging market equities. Just put 5 or 10 or 15 and take them from the growth and emerging market slot. And what you will find is the returns per unit of risk, and that's the important one there. The returns per unit of risk go up with this diversified strategy during almost every 5-year rolling period, meaning monthly, 5 years, 60 months. And also the important thing is rebalance. When we have, maybe we are up, I'm going to say 15 percentage points relative to the market, take some profits. When we're down 15 percentage points relative to the market, buy more and get used to that. And the results longer term, cannot make promises. Of course, my compliance department would have great issue with that. But the history would suggest that's a very good way to use our strategy.
Yeah. Just a couple more questions in the on around. So I know we've taken a lot of your valuable time. We could talk for a lot longer. Softer question here. With all that weight on your shoulders, albeit it sounds like you're managing with it very well. Just a couple of habits you might have. Would like to know if there's a particular ritual that you have in the day that keeps you meditative or grounded.
Yes, a couple of things. I read a devotional every day, and this particular devotional is written like a diary that Jesus would have written. And talk about center, it's called Jesus Calling. It's very centering, meditative. There are scripture readings that go with it, and it does put everything in perspective. So that's one thing. And then I find that walking, and I will walk anywhere. I love walking, but walking and talking with people, whether even on the phone, but just the focus, and sometimes just alone, that's more meditative. But talking, really thinking through problems, either with in person, walking with a person, or on the phone, it doesn't matter. So that is also, I think, very important, just that focus, because in an office there, or in a home, there are many distractions, right? But if you are setting out to go from point A to point B, and that's your goal, and you're not going to be dissuaded from it, you have to promise yourself that focus is invaluable.
Yeah, I find exactly the same with trying to not make it just recommend a book. With the feels like convergence thesis that you have, and I've read a few of these. Is there a recommendation that you think is a great book or author to that topic?
Can I toot our chief futurist's horn a bit here? Because he just published a paper called Convergence. It's on our website.
Yep.
Yeah, it is. It's a great paper. He's pulled together and he scores different technologies, which ones are going to be the biggest catalysts, which ones are going to be the biggest beneficiaries of these other technologies. It's a very good piece.
Amazing. We'll put that in the show notes. Even better than just a traditional book.
And then, it's hot off the press too.
Yeah, amazing. Yeah. There's a topic that I'll be fascinated to read, and I'm sure the audience will. So Cathie, what do you think your mana is?
Oh gosh, I thought you were going to tell me what my mana is.
I'm going to ask what you think it is, and then we'll see. Collaboration.
Yeah, definitely. Well, yes, I think what, if I understand this concept correctly, and of course, mana is also in the Bible. I know, yes, maybe not the same. Yeah. So what gets me really excited is that part of what this answer is yes. It is with the research team, during our brainstorm each Friday, and we have morning meetings as well, but Friday is all about ideation, saying, wow, this happened this past week, and it is helping us understand how AI is going to impact education. This was a big topic about when ChatGPT came out. It was like, boom, 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 boom. And we have people within the firm and from outside of the firm who are, experts in some innovation or another. And just that, I just love aha moments coming out of that. That has to be, and we're talking career here. That's what I've been focusing on. Yes, of course, always there's the personal, but just that aha moment, like, we just hit on something that no one's talking about. And it's that no one's talking about. So to give you an idea on that, Tasha Keeney comes into our brainstorm in 2014. We had tasked her, because we're, take a white sheet of paper, first principles research, go figure out what an autonomous vehicle is. And after some time, she came back and she said, it appears that the brains or the central nervous system of an autonomous vehicle will be GPUs. I said, what? I said, nobody knows that. Nobody knows that. And here we had NVIDIA in the portfolio. It was on the split stock basis. It was $4. And I said, nobody knows that. And I said, and we took it right to the top of a number of our portfolios because, and we hired someone from NVIDIA who continued to fill in the blanks for us. He said, yeah, it's not just autonomous vehicles, it's artificial intelligence. Boom, another one, so, and it's just very exciting to think now, ChatGPT moment, education. The first thing people worried about was, our kids aren't going to be learning anymore. We noodled through that and came to the conclusion, yes, they are. They absolutely are. They're not going to trust anything they read, meaning they've asked ChatGPT to do their homework on the history of space exploration. They're going to do reality checks. Wait, does that make sense? Was I taught that? They're going to learn in a different and actually more profound way. Instead of memorization, they'll be thinking it through. And I think that's going to be wonderful.
Absolutely love it. Well, clearly here we see, and it's not always the case, somebody who has found the exact right career for them honor. That's clear, isn't it? That you are somebody who gets great pleasure out of fixing jigsaw puzzles, looking at future trends, and then of course, directing your business towards those, but not just for business sake, but clearly because you absolutely just love the first principle thinking and doing it with a bunch of ambitious and bright people. So yes. Congratulations. What an amazing place to find yourself in. Well,
Thank you.
Thanks so much for speaking so openly. I won't take too long in this final part, Cathie, because we've slightly overrun the time.
Yeah.
We'll
do. I have 10 minutes. Is that good?
That's perfect. Yeah, we'll do okay. The full biography at some point if you'll not choose Walter Isaacson and choose the Searching for Mana people. We'd love to do that. So you said that you'll give us price prediction on BTC. So let's leave that last. I'll just ask one question, and then if you can do that at the end and spend as little or as much of that time on it as possible. If you could really project out as far as your research is and as far as you want to, whether that's 5 years or whether that's more up to you, on particularly the AI space. And I know my sense is that that's the one, and I think yours is, that's going to transcend across all of these other multidisciplinary spaces. So you got to NVIDIA early, which was a masterclass, but what are you looking at now? And to finish, why are you excited about that?
Excited about, are we talking about NVIDIA or AI?
Not NVIDIA, no, but
AI,
AI as a space.
Yeah. Okay, AI as a space. As an economist, I know that productivity growth is the secret to solving lots of problems and creating incredible wealth. And AI is probably going to be the tool, the most important tool in history to increase productivity across the board.
Yep.
And so it's going to benefit so many industries. The challenge in AI right now, from an investment point of view, is there's also going to be a tremendous amount of commoditization. There are open source models being created, meta platforms. Grok is another one created by X and other important open source. So, okay, where are the economics going to reside? And how much are we going to pay for these productivity gains? So they're going to be very, email productivity. You're not going to pay much for that. That's going to be a given. It's got to be a feature. Other kinds of productivity, like curing disease. Yeah. That's the ultimate productivity, extending human life, right? You're going to pay a lot for that. And that's the convergence of AI and sequencing technologies, along with CRISPR gene editing. So the implications are profound for every industry and every person. And, we are, with our quarterly callbacks to various companies, asking them, how are you harnessing these tools? What are you doing to become a part of this new age? Where do you think the value will reside? How much do you think you can charge? So it's like the very early days of the internet. And you said at the outset, regulation. I hope it'd be like regulating the internet in its very early days, and that would have really stunted its growth. Half the solution is understanding the problem. All technologies can be used for nefarious purposes. And open source is much closer to neighborhood watch. We're all watching this thing because our livelihoods depend on it. So I'm probably not as worried about the ramifications of AI, because so many people are worrying about it, especially Elon Musk.
Yeah, and that's the debate around, if you look at AI models being controlled by an organization, or if you were to set it up where the training were to happen in specialist fields. Let's consider a gardening community spoke to how to grow roses best. Is that the democratization of the AI? Because then you have all these communities building specialist AI. Will regulation make it go down that path? And it's fascinating because from an economic perspective, I could see how one is easier to invest in or profit from a business, and how the other one might govern it better, as you say, and potentially be better. And so the internet is one thing, but the concern over AI right now and how it might be able to take my daughter's image and use it, and then I don't have the decision whether that data is used or I extract value from it, is, I think, aligned to this huge big tech debate that's been going on for 7 years. And so
yes,
I don't know if governments aren't going to react very strongly, but you're confident that they won't?
Oh, I'm not confident they won't. I'm happy so many people are concerned, and yes, very importantly for
children.
Just to be
clear, I'm actually not necessarily concerned, but I know a lot of people are. Yeah.
Yeah, and I've seen it done with our our website, our material. There's a lot of fake stuff out there. We're figuring it out. We're going to know if it's fake, right? Most people won't. So it's incumbent upon us to make sure that we are on top of that.
Yeah, absolutely. And that last request, if you could be so kind to give us your Bitcoin prediction, please.
And before I do that, what I will give you is the prediction for all of disruptive innovation.
Yes.
Yes. So we believe that disruptive innovation today is valued in the public and private markets at somewhere in the 15 to $20 trillion range. So I would say now, given what's happened recently, it's probably closer to 15 trillion. So a little over 10% of the global equity market cap. We think that is going to 220 trillion by 2030. For the reasons I suggested, growth is good, economic growth itself, thanks to productivity, AI, a huge part of it, but the fastest growing of all of the platforms, because it's at the lowest base right now, is robotics. It's 80% over the next 5 to 8 years. Whereas AI related is probably closer to 40%. Still beautiful growth rates. And the others are in between those. So wanted to set that out. Bitcoin, our price target, our bull case price target, and I say I'm focusing on bull case now because of the approval of the ETFs, which essentially has given a green light to fiduciaries, institutions, to gain exposure or not to this new asset class. They have to consider it now. They have to consider it. And so we think that the bull case is closer to the mark. Our bull case in print, we're at $1.5 million per Bitcoin. And our bear case, so we are a little higher than Tim's, I would say. Not competitive at all, though. No, I'm kidding. Our base case had been, before the approval, somewhere in the $650,000 range.
Yeah, amazing. Thank you so much, Cathie. Last question. Who would you recommend to come on to the Searching for Mana show?
Oh, that's a very good question. Well, I mean, if you, I hate to be so self-serving, and I apologize for this, but if you're going to feature the Convergence paper, our chief futurist, who is an engineer by training, MIT grad, wanted to get into education when he first got out of MIT to reform the educational system in California. That didn't quite work out. This was plan B. So he's a very interesting person personally, but he's got an incredible mind.
Yeah, well, it'd be great because anybody who's enjoyed some of the topics you talked to on that space then will love listening to him. And we can also then get you to help with predicting what his mana is. Cathie, thank you so much for coming on the Searching for Mana show.
Thank you. Thank you, Lloyd.
Thank you for joining us on this episode. We hope you've enjoyed it. Please leave a like and a review and subscribe to our iTunes channel to stay up to date with the newest content. Find us on social media at Searching for Mana. Tell us who you want next on the show. Thanks again, and see you next time.